everybody. We'll get started with the technical analysis webinar at this time. My name's Troy. I'll be presenting today for AvaTrade. Before we get going, just a quick systems check. If you would, type OK in the chat box if you're seeing my screen all right and hearing me clearly. Okay, just waiting on some more responses so I make sure at least the majority of us are up and running okay. If you would, type OK in the chat box so that I know we're up and running all right. Okay, great. Looks like we're good to go. I've got enough responses. If anyone has any issues as we go along, please let me know. I can always take a look at adjusting things. Some big movements today on the market. We'll see some gaps on the charts, some nice technical entry points and exit points that you could work with and could have already worked with if you haven't already. Now, as we get going, some things to keep in mind. All investments obviously have risk. No one trade is guaranteed to make profits. So obviously you want to manage your risk in a way that makes sense for you. When you're trading Forex, spread betting, CFDs, options, clearly risk is involved. You can find our full risk disclosure statement on our website. Now, also obviously there's nice potential for profit, which is why we're all here to try and find maybe better ways to go about setting things up and building or improving upon our strategies to go after the best potential profits for our trading plans. Now, as we go over some ideas and some charts, keep in mind that what we cover is meant to be educational in nature and is not meant to be taken as financial advisement. Now, speaking of risk, I don't know if any of you have checked out the AvaGo mobile app. It's AvaTrade's self-made mobile app for trading on the MT4 platform. If you haven't, maybe get it on your mobile devices, check it out. It's got a nice feature on it called AvaProtect that protects you against losses from trades for defined time periods. You can choose from hours to 1 day to 2 days, etc. And any losses you have during that covered period are completely added back. Profits are yours, and there's just a small premium cost for that type of coverage. So it's something that would be nice for you to check out on the AvaGo app. And maybe if we have time, I'll show that to you on our website as well. Now, as we move forward, keep in mind technical analysis involves looking at the charts, looking back at the historical movements, looking for patterns that may or may not repeat themselves, that give you potentially opportunistic entry points for the movements to occur in the future. Now, obviously, what happened in the past is not guaranteed to occur in the future, but it does give you ideas about probabilities and likeliness of potential movements in the future as we look at historical data. And we'll stick to mostly manual methods of technical analysis, and we won't use much of any indicators in our session today. Any questions that you have as we go along, please ask. I'm happy to either give input that you might be giving or cover questions that you have as we go along. Now, before we get on the charts on my demo to look at the technical analysis, let's look at what's been happening fundamentally real quick. Quite obviously, if we look at this down here, very quick snapshot, okay? Yesterday, we had a little bit of green on the markets. When we look at the futures, which are going right now, okay, S&P 500 futures, Nasdaq futures, Dow futures, what do we see? We see red, okay, which means the markets, the futures market right now is dropping on the major indices. If we look at the volatility index, which is moving right now, it's up. Volatility is up over 10% on the VIX index. That's sometimes referred to as the fear index, meaning gold has probably a likelihood of having climbed today as well when we look at the volatility index being up nearly 12%. Okay, so this snapshot shows fear in the market, futures turning red, volatility index way up, over 11% climb, 11.5% climb. So this gives you an idea of which way the wind is blowing today. A lot of fear on the markets. And you might ask, well, why? What happened? If you've been paying attention to what's happened with the coronavirus and this China situation, Apple gave a warning yesterday and overnight. Okay. They said, hey, it's not looking good for our numbers right now because of all the shutdowns that have occurred in China because of the coronavirus. You understand a lot of their production and manufacturing occurs in China, and factories were shut down. Like 50 million people were on quarantine for weeks. Apple's the first company coming out to say, this is not going to be good here in the short term for the effect that this has on our business and our production and our numbers. So as soon as Apple gave that warning, wow, markets reacted. Okay. And now Walmart had some numbers that missed. So that's adding to the fear on the markets. So there's a bit of a sell-off occurring. All right. And it was easy to see, technically speaking, as well, and to take advantage of, technically speaking. We'll take a look at how you could have already profited from this and how you might be able to moving forward. And if we look at some other articles, this is Reuters, another news source. Again, if Apple is hurting due to the coronavirus, which we just saw Apple themselves say they think they will be, what do you think that happens? What do you think happens then to Apple's suppliers and their rivals? This article suggests that likely they're going to be hurting too. So the fear on the market isn't just that, hey, Apple might have problems. The fear is, what does that mean about everybody else that's associated with production in China, factories in China, suppliers that might be affected by China, etc. So now the fear is spreading across the market that rivals and suppliers related to Apple and other companies that are rivals of Apple, there might be a big problem going on here. And we alluded to this earlier in the week and last week that, hey, if in the short term gold was pulling down and the markets were rising, you still could have the opposite view in the longer term that over the next month or two, there could be a negative effect from this coronavirus because of all the shutdown that occurred in China. When I say shutdown, I mean factories and production, that sort of thing that was slowed or stopped for weeks at a time. Okay, so we get the idea here, kind of doom and gloom in that article, doom and gloom in this article, doom and gloom in the futures, and also volatility and fear on the VIX index. Okay, so as we move forward, we need to keep those things in mind. And then we can also look at, what else did I have here? Economic calendar. Okay, some negative news on the euro. Look at this. German numbers, current conditions, worse than expected. German economic sentiment, worse than expected, way worse than expected. Spanish numbers, worse than, kind of flat, but not better than expected. And we've got some other German or economic sentiment here, worse than expected. And some German numbers here that were as expected or close. So either flat or negative for the euro on announcements that occurred today, some of them high-level announcements and mid-level announcements. Mixed news on the pound, some negative, some positive. So looking at the economic calendar, we've got leaning negative on the euro. And then if we look at the headline here, euro near 3-year low. Okay, it hit the euro hard. Those economic numbers combined with the bad news on the markets in general, the fear kind of spread right into the euro with those bad numbers hitting. So with that in mind, then we move to the charts. Okay, so let's take a look at what's happening on the charts. This is Apple, which is not moving yet because it's a US stock and the US market hasn't opened yet. Our US stocks are not traded on futures, they're traded on the actual market when it opens. So what do you think is going to happen to Apple when the market opens? Let's take a quick poll of everybody. What do you think will happen when the market opens? What will Apple stock probably do after what we just looked at in those headlines? Anybody think that Apple will go up at market open or down? Yeah, I'm seeing from some of you what I'm thinking. Apple reported that this coronavirus is probably going to hurt their numbers. The markets are crashing right about now in full fear. The fear index is way up. So probably you're going to see a gap that's maybe quite large in the downward direction. Okay. A gap is when, like this, you see here from the close of the market to the open, there's a space, it gaps. You may see a large gap down for Apple at market open. No guarantee, but you might see it. Can you take advantage of that now? No. You can't open a position now. The market's closed on Apple. When the market opens, you may see a huge gap. Then the question is, well, what do I do? There are two different ways to play a gap. If it starts to retrace back into the gap, you can trade with it back to yesterday's close. Or if it gaps and just keeps running, you can ride the wave in the same direction as the gap, expecting the momentum to continue if it doesn't start to retrace the gap. I'll show you that on the indices, which already gapped. I'll show you how that works. So let's take a look at maybe Nasdaq. And we'll talk about what you might see occur on Apple. We'll look at what already occurred on Nasdaq, and you might see a similar occurrence. So sometimes you say hindsight is 2020. If I would have only known that that's what might happen, well, let's look at what already happened with Nasdaq. And if you understand Apple might move the same as Nasdaq did, then now you've got a preemptive idea of what might happen with Apple, already seeing what occurred with Nasdaq. So let's look at Nasdaq. It gapped down, right? Just like we were saying. So here's the gap down from here to here, okay? The gap is the space from the close yesterday, okay? And I'm sorry, the gap was from Friday. Let's see here. No, that is today. Okay, this was yesterday. All right, we're looking at 1 hour candles. This was yesterday. If I can get it to activate the date and time. Let's go to 30-minute candles. It might be easier. Here we are. Let me delete these lines. That's what's getting in the way. Let's get rid of some of my lines from yesterday. If you're trying to point in a candle that keeps pointing at your trend line, you probably have too many lines drawn. Okay, there's the candle then, showing the time that was 5:30 p.m. yesterday. And look at the gap down on the Nasdaq. Okay, that was after the market closed that Apple made that announcement. So you didn't see Apple drop because the market was closed. But you saw Nasdaq drop, okay, which has Apple in it, right? So you see Nasdaq drop because we have the futures here. So you're getting a glimpse of the future maybe for Apple, because the indice that has Apple in it, okay, dropped already. It gapped down huge, okay, and that wasn't a gap like from Friday to Monday where the gap occurred through the weekend. It occurred in an instant. The market was open. The market was still moving, and look at the gap. Okay, so it gapped down. Then you see it never re-entered the gap. Okay, so the gap went to here, right? It never started to trend back up. It went right back into a downtrend. Okay, so once it gapped to this area and then continued to a lower point, let's say it broke below here. So it gapped down, support, didn't break back above the wick, the initial down and bounce, and then it tried to go up and it continued down. As soon as you saw, and these are 30-minute candles, so you didn't have to rush into this. As soon as you saw no re-enter of the gap after the initial wick, it bounced a little and then started to go down. Here's the support. Once it broke that support, your entry price to go with the direction of the gap, okay? Why? Because the technical analysis broke this little support and went into a further downtrend. So had you entered here, as this was the breakthrough candle of the little support that formed after the downward gap, why are you looking for it to break the support and to trade down? Because that's the direction of the gap. That's the momentum, okay? You're going with the fundamental news with your technical analysis in this example. What was the fundamental news? Horrible news for Apple. Horrible news projected maybe for its rivals and its suppliers based on the China coronavirus situation. The headlines were there already. You didn't have to guess. So a little bit of fundamental news explains the gap, explains the downtrend. It breaks the support and you're in. So even if you got in late, after the gap, after the support level formed and after it broke the support, you got in here at 95.80 or so. You still could have been in all the way down to 95.35. That's $50 drop per indice. Okay? A 10 indice position, $500, even on a late entry, just going with a simple breakthrough on your technical analysis on this little support. Breakthrough candle, you're in. You could have had a pending. By the way, what pending order would have gotten you in? You could have placed it below this support. What pending order would have sold once it broke the support? You'd have been in on this whole drop here. What kind of pending order would have sold from a lower point? Here's market execution. You switch to pending order. You pick pending order type. What kind of pending order sells from a lower point? Sell stop. Okay, very easy. You could have saw the gap down, saw that it wasn't retracing back into the gap to fill it, and it continued down. You see the little support level. You put your pending order to sell if it hits this price down here. For example, 95.80. It hits the price if that's what you programmed it for, and boom, it would have sold for you at that price once it confirmed a downtrend after the downward gap. And look at how it plunged after that. $50 down per indice. Any questions on that? Type OK if you're with me on the concept of it gapped. It continued a downtrend by breaking the support it established, confirming momentum in the direction of the gap. Sell stop order would have gotten you in. Any questions or type OK? So type yes if you think you might see the same sort of thing occur with Apple today. When the market opens, what do you think might happen with Apple? Gap up or gap down? Yeah, probably gap down. Ella, Lucas, everybody else who's answering. Exactly, probably a gap down. No guarantee, but hey, we're waiting to see, right? Hindsight's 2020. If you see a huge gap down after the open today, and it doesn't go into an uptrend to fill the gap, and it continues with a further downtrend after the gap, if it does what the Nasdaq did, that's an easy move, right? Okay, you're asking when do you place the buy on Nasdaq? Do you want to buy on Nasdaq right now? A lot of fear in the market. Articles are negative about Apple and its competitors potentially and its suppliers. I see Nasdaq climbing now, and you certainly could have traded on the rebound back up, but is going through the rest of the day, is Nasdaq more likely to climb or drop? You might wait for the market to open. Where would be an ideal spot if you wanted to sell Nasdaq? Where would be an ideal spot to have a pending order to sell? What if it returns to the gap price up here? What if the futures before the market opens returns to the price that it opened at with the downward gap? What kind of pending order could sell if it returns to this price that it opened today? A pending, what kind of pending order sells from a higher price if you wanted to program it to sell from the open price today? If it returns back up, it would sell from there. What kind of pending order is that? That would be a sell limit. Okay, sell limit, I'll show you. Let's say I'm saying, okay, it might return to the open price where it gapped down to before the plunge. So let's say 96.10. If I wanted to sell from 96.10, sell limit, pending order 96.10, whatever trade size is right for me. I could put a stop loss above the gap, maybe 96.30. Okay. And then take profit would be somewhere back down to where it already plunged to. Let's say back down halfway, 95.70. Place. Okay, there's my pending order. If the price returns back near the gap price, it'll sell. It with anticipation to take the profit if it comes back down to this support level right here. About 5 times potential profit with that move compared to where my stop loss is up here. Or let's say 3 times, depending where you put your stop loss, how far into the gap you put your stop loss. Why should it retrace the gap with all the negative news? That's the idea with this setup. Now, if you believe it's going to return all the way to the gap, you could buy on it now. If you believe it's going to keep climbing to the gap, go ahead and buy. Okay? I don't like to trade against the fundamental news, but right now it has some momentum, correcting some of the drop. If you think it's going to return up, buy then. Okay? The technicals show if we go to 5-minute, 15-minute candles, it's got a resistance point that it broke. Okay? It broke this resistance right here. So maybe it's going to try and come back up to the open price before it drops down. I'm not in the business of going against the fundamental news. You can if you want. Okay? If you want to be patient and wait for an entry point to sell, that's okay too. All right? At least you understand what you're doing though. The technicals are showing uptrend. You certainly can buy. The fundamentals say it's more likely to come down than to go up. If you think it'll climb, maybe you're more patient and you wait for an opportunity to sell. Or do both. That's okay as well. All right, let's take a look at gold, because gold probably makes sense to look at with all the fear in the markets. Okay, predictably, gold gapped up. Okay, how easy would that have been after the gap up, after it formed the first resistance? Okay, here's the upward gap. Here's the resistance. Once it went up, you could have had a pending buy stop to buy from this point here. Okay, going in the direction of the gap after it establishes resistance and a breakthrough. Same idea that you could do with Apple. And even waiting, the gap up, the stabilization, the resistance point forms, then the breakthrough of the resistance, even waiting to get in until then with your buy, you could have already profited per ounce. It went up to 15.89 from this entry on the breakthrough from 15.86 or so. So another $3-4 per ounce climb. That's a huge move, even if it's $2 climb. Times if you had a 1-lot position, 100 ounces, times 2, $200 scalp. And depending on the size of your position, 10-lot position, 5-lot position, even a half-a-lot position would have paid nice. And you should take the trade sizes that are right for your balance, but you could see how easy of a prediction this was. Market gapped up with the Apple news. It did not retrace the gap. It established a resistance point and then broke through the resistance. Easy move. Technical analysis, broken resistance. Typically you say buy. The fundamental news is on your side. The gap direction was on your side. So you have 3 different reasons to think as it broke this little resistance, why it might keep climbing. And it certainly did for another $2 or $3 climb. Okay. All right, any questions, or type okay if you're with me on how you could have taken advantage already of the movements down on the indices, up on gold, etc. The volatility index is still high. So if gold drops to a support level, let's say gold drops to this support level right here. Okay, support. If gold drops to this support, what might you want to do? What might you want to do if gold drops to the support level right now? Down to this level. You're welcome, Ella. So if this drops to the support, what kind of pending order would buy from the support if that's what you wanted to do? If you think the market is still volatile and gold should climb, if gold happens to drop to the support level, what kind of pending order would buy from a lower point? Let's do it. I'll show you. If you wanted to prepare in case gold drops down to buy from that support level, pending order, buy limit, buys from a lower point. And so let's say if it drops to 1585.8, 1585.8. And I'm not saying when I'm setting up these hypothetical trades, I'm not saying you should take these exact trades. Okay. It's the concept I want you to understand. And so place. Okay. There's my pending order. Why did I put my pending order in this location to buy on gold? Because it's right above this support level. Why do I trust the support level? Because there was horrible news for the markets from Apple. Okay. And so the volatility index is through the roof today. We looked at the VIX index. It's up 11 and a half, almost 12% on the day. If gold happens to pull back to the support level, you might trust the support level to hold more than you would think it would break because of the fundamental news we looked at. And if that's how you feel, then a buy limit program down here makes sense. Type okay if you're with me on that idea of how to set up a buy limit. All right, good. Now, there's a resistance level up here. Resistance. If gold never pulls back, because there's so much volatility on the market, gold might not pull back to that support level. If gold breaks this resistance level here, resistance, 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 if it breaks the resistance, what kind of pending order gets you in with a buy if it breaks the resistance? If you think it'll keep climbing, if it breaks the resistance, what kind of pending order up here gets you in with a buy? Yeah, exactly. You could have a buy stop prepared. Okay. If it breaks the resistance level at the top end, confirming upward momentum, you could have a buy stop waiting at a higher price, ready to buy also. Okay, because your buy limit might never get activated. If gold just keeps climbing, it won't come back to the support then maybe. And if you still wanted to buy on gold, then a buy stop also might make sense as well, somewhere above the resistance level that you see here, resistance. Okay, somewhere up here to get in with a buy stop. Just an idea. I'm not saying you have to do that, but it's an idea. Before we look at oil, what do you think's happening to oil? If the markets are crashing down on the indices and gold is rising, what do you think's happening with oil? Before we even look at the chart, you should be able to predict. And this is how you know that probably you should trade in a preferred direction based on fundamentals before you set up your technical analysis. Which way do you think oil's been going today? Up or down? Bad economic news. What do you think happened with oil? Yeah, probably down, right? And I trust you, I didn't even look at the chart. There it is, down. Okay, 15-minute candles, plunging. Look at the plunge. Easy, easy trading, folks. All you had to do is draw support levels. Here's our first support level. Okay, support, support, support. As soon as the support level was broken, you could have had a sell stop selling. Okay, one time. Here's the next support level. Okay, support, support. Soon as it broke the support, you could have had another sell stop, pending order, sell. Okay, why would you keep setting up sell positions below the support level? Using technical analysis to find the support level, put a pending sell stop below it. If it breaks the support, it sells automatically. Why would you do that today? Because the fundamental news was negative for the market. What happens with oil prices usually when there's bad economic news? Usually oil prices then drop. Not always, okay, but many, many times. You're not always going to be right, but look how many times you'd have been right today already. 1 out of 1 with a broken support, forms a new support, it breaks, you sell. 2 out of 2, and really 3 out of 3. Here's the next support, support level, support, broken support, and in the money again. Okay? Very simple strategy. So I think I'll leave you with that today. So the idea is find the direction of the fundamental news. It's easy to see today. Then look for your technical entry points with your technical analysis. Find the support or resistance levels. If it's an asset you think should drop with the bad economic news, then set up your pending orders to sell. Those would be sell stops just below the support if you think it's going to break the support and then plunge. Vice versa, if it's something like gold that you think should climb with the fundamental news today, then you're setting up pending orders to go in the other direction at opportunistic points based on entry points, based on your technical analysis entry points, off of support levels for gold, or at the top side of resistance levels if gold breaks through. Okay, but again, you're going in the direction that you believe the fundamental news says the movements should go, and then you're using technical analysis to zero in on your exact entry points for either market moves or pending orders. All right, any questions before we end things? We've been going for a little over a half hour now. I think it's enough today. The market's easy to read. Fear on the markets. Futures in red. Thus far, safe havens climbing today, and assets that are considered more risky dropping. And we can see, I'll show you the snapshot of the market again here. Volatility index way up, near 10% climb. Futures down. Okay, that's the story so far today. Obviously, things can change. There's no guarantee that that continues, but it's there. It's been there for hours. You could have already profited from it. Good luck moving forward, taking advantage, hopefully, of some of these movements that will likely occur through the day today still. Okay, bye for now, everybody. Thank you for joining. I expect big movements still, maybe some pullbacks and then further movements on these indices, especially as the U.S. market opens, and also gold and oil. Keep an eye for really big movements as the U.S. market opens at New York time, 9:30 a.m. Okay. All right. Bye for now. Thank you for joining.